Thanks for a great turnout. Lovely all to see some familiar faces. I am Managing Director and CEO of Pursuit Minerals. Also a warm welcome to Tom Eady, my non-executive director and fellow board member up there as well. Good to see Tom in the house. Let's get to the next slide. So Pursuit, we'll just cover off. We're a lithium developer. I like to really focus the development. The company in itself, lithium exposure. We are an Argentinian-based asset in the Salta province of Argentina. We have a 10,000 hectare land position on the Rio Grande Sur, aptly named the Rio Grande Sur Project. The deposit itself holds an initial maiden resource of about 250,000 tonnes lithium carbonate equivalent. That's 350 mgli. For back of maths, that's very similar to Argosy, what they held before their upgrade over the last 4 years. In terms of pathway to production, we actually have a lithium carbonate plant at 250 tonne capacity that is constructed, is commissioned, and is about to start processing in the city of Salta. Argentinian lithium is arguably now a tier 1 address, and I want to really talk about the old tier 1 equation for anyone who used to work at Rio Tinto. Your initiation slide deck always had that T1 equals size, scale, and grade, SSG, and that's a real thematic that we've tried to build into this project. Obviously, when Rio Tinto, the smart money enters the room, people look up. They were obviously there in the north at Rincon. We've had Ganfeng, who I think are the 3rd largest now lithium producer in the world, been on a massive acquisition spree in the Argentinian Puna. Their biggest was Pozuelos, which was a $980 million US acquisition. So Argentina is going through a bit of a resurgence now, over jumping Chile in terms of Chile's nationalization issues that are a constant foray. You know, Argentina is very pro-business, very open for foreign direct investment, and has a very interesting new president, if you're into the old cloning Labradors and tantric sex that he talks about in some of his government speeches. But nonetheless, the fiscal policy has seen a decrease in inflation for the last 2 quarters. He's doing what needs to be done. So for us, a strong outlook to growth, and I'll go through that with the next slide. So what are we focusing on? It's 3 key elements that will really unlock what is a tier 1 potential project. So for us, we are about to start becoming a lithium producer, and that's actually our plant up there on the left. Fully constructed, ready to go. That is about to start the first test work and building up of the circuit, building up of the inventory. We're producing a battery-grade lithium carbonate. We've been able to work through all of the impurity profile issues, all of the standard issues on a base flow chart at least, that plague lithium juniors. The lithium market is really separated now into 2 clear areas, guys who can produce and guys who can't. There is a clear mismatch and lack of supply that's being shown in demand forecasts. You know, a lot of the majors, Morgan Stanley, Goldman Sachs, they're coming out with these forecasts, a lot of them centered around DLE. Whilst DLE is in its infancy, the pragmatic reality is there is not a single standalone DLE plant above 20,000 tonnes in operation. So when you're comparing to Albemarle, you're comparing to SQM, La Negra 2, these are all conventional evaporation-based plants that are in operation. So we're quite excited about our plant. We are intending to relocate this from its warehouse up to site. So for us, we'll be testing the initial brine. We're also drilling, which will allow us to capture some initial brine in some test work ponds. We'll truck that down once it's finished its evaporation to this plant, at which point we'll start producing the lithium carbonate, look to produce the first 5 to 10 tonnes. Once that's done, up to site, at which point producing 250 tonnes in the Argentinian Puna is more difficult than you would probably imagine. But having said that, once you are producing a 250-tonne plant, this is no longer a project about can it produce. It is about scale. Chemical engineering is really what lithium mining is. Lithium mining masquerades as chemical engineering, just as iron ore production is logistics masquerading as mining. If you are unable to produce it, the lithium doesn't really have the same sort of value. So for us, 250 tonnes, a factor 80 expansion, which is the chemical engineering standard deviation and limits, that produces a 20,000 tonne output. So in addition to our production, the battery grade, we're in various discussions with off-takers. We'll actually have some of our first samples within the next quarter. We're not talking massive volumes, you're talking kilos, not tons. However, that really starts to show that this is a viable project that can get into production. From there, we're looking at a resource upgrade. We have announced that we've just commenced our maiden drilling campaign, an initial 4 diamond holes over the south of our project. If you look at our project, it's split into 2 areas. One is traditional on halide, on the salar. The Rio Grande Salar has an Ni 43-101 resource from LSC Lithium of 2.1 million tons LCE. LSC Lithium was acquired by Plus Petrol, which is now Litica Resources, in 2018. They've been actively drilling out the salar. Typically Argentinian, typically private company, not sharing too much data. But we understand that their resource on the entire salar is in the 15 to 20 million ton range, which is quite a significant asset. For comparison, anything over 1 million tons is 50 years of mine life at 20,000 tons. So that's going back to that size and scale dynamic. The Rio Grande Salar is also very similar in its size to Pozuelos, which was the salar acquired by Ganfeng for $980 million US. So a lot of potential in this resource. We're going to drill our first 2,500 meters. There's a neighboring TSX company that drilled the same amount. Similar land position, we actually have more on salar ground than they do, and they yielded a 2.3 million ton Ni 43-101 resource at 640 mgli. It's also worthwhile mentioning that the Rio Grande Salar has some of the highest grades in Argentina. The TSX company had an intercept above 960 mgli. That's firmly in the top tier of the top quartiles. For comparison, Hombre Muerto, which is often seen as the gold standard, that's the Arcadium Lithium, formerly FMC Phoenix mine, longest operating mine in Argentina since 1987. That has a grade of about 880 mgli. So you're right up in that tier 1 company in terms of resource size and resource grade. So for us, compare apples to apples, we're doing 2,500 meters of drilling. There's a good idea of where we can get. And as stated, we have a good exploration target on that southern core on the southern section. The northern section has very similar geology to Galan Lithium, for any of those who are a shareholder. The aquifer of the Rio Grande Salar, being a mature salar, extends out underneath the halides, of which for us we have a northern section originally pegged for infrastructure. With lithium, you need space. You need 5 to 6, 7 kilometer stretches to put down evaporation ponds for a 20,000 ton project. A lot of the patchwork quilts that are running around will just not be able to get to that size. So it goes back to that tier 1 size, scale, grade. You need size and you need scale. So from that perspective, however, the northern section, that was where some of the best grades were yielded. So that 950 mgli intercept I mentioned earlier, that was about 2 kilometers directly east from our tenement. So in terms of prospectivity, we're looking at an initial resource on the salar, and we have a fair understanding and idea of that geology. Our current resource is only to 200 meters. We're going to be drilling down to 600. In fact, as a typical Australian, I just said, don't stop. If we get good grades, you just keep going. 700, 800, let's just keep going. So from there, how are we tying it all together? A bankable feasibility study, which is underway at the moment. Conceptually, we were looking at between 15 to 25,000 tons. Now, building these plants obviously is it takes more than a smile. However, it goes back to that critical first step, being in production on a continuous basis at 250 tons. It changes the dynamic and nature of the project. You're no longer appraisal, it's not theoretical, it's about scale linked to capital and all the rest. So for us, we are in offtake discussions. One of the things that you can't see on this slide is the evaporation pond conceptual design. We are in discussions with debt finance of that, in specific using long-term letters of credit as a line item. So getting into the nitty-gritty, pretty much what we did in iron ore back in the day, using offtake and debt prepay. So from that perspective, the feasibility, we're looking at the 20,000 ton mark. The CapEx and OpEx. So CapEx is around that 400 million US, 410 million US. OpEx is getting right down to the 3,500 per ton. So when comparing in the lithium universe, the brine projects will always beat out hard rock. For those who know me, I always tell the story of FMC, how they used to be a North Carolina hard rock miner. Hard rock mining became too expensive. They ventured into Argentina, bought Hombre Muerto because they couldn't produce. They're actually buying lithium from the Chileans, from SQM back in 86, 87, and that was the genesis of the brine sort of hard rock story. So for us at that 3,500 a ton, when you're producing it, let's say Mount Marion, Mount Cattlin, their OpEx per ton for spodumene, a 6% concentrate, is above 1,000 a ton. So if you're buying sort of 12, 20 parts of that, you're getting right into that double the cost of the brine area. So going back to that tier one nature, size, scale, grade, lowest cost quartile. Brine projects will always win out, at which point we're in that area. The carbonate plant at 250 tons is a little bit more expensive, smaller scale. We're looking at about that 5,500, 6,000 a ton. However, when I checked the spot price before, we're about 15,600 per ton. So that's a nearly $10,000 margin, where we're making the better part of about 2.4 million, 2 point something million US, but about 3.4 million Aussie in gross profit before, once you're selling that into the market. So it's not the biggest number, but it's a good, healthy indicator of, okay, profitable, sizable, scalable, high grade. How do we scale this? There's also an area for consolidation. We are seeing a lot of serious M&A happening in Argentina right now. The latest one was Tech Petrol, which acquired Alpha Lithium. In doing that, that also helps juniors like ourselves. A new labor becomes available that wasn't previously there. So Tech Petrol acquired Alpha Lithium for 230 million US, and you're looking at the comparison. They were building a 100-ton DLE plant at the Tolala Salar, and they had a 3.3 million ton resource. We're seeing a lot of activity, especially from the Chinese, from Ganfeng, from Tianxi, and also established majors. Eramet is quite active at their Centenario project. You have Lithium Argentina's, Lithium America's ramping up, and then obviously the Arcadium merger between the two superpowers that were in Argentina. So for us, there's also a supply and demand element where these projects will not be able to be pegged in the next couple of years. There's 17 salars in Argentina, no more, no less. And majority of them now are consolidated by majors. You know, Rio Tinto has Rincon. There's the questions, will they clean up others around them? You're seeing a lot of these pure play salars, Pozuelos. You're seeing Pasos Grandes, where I formerly founded a company, that's now Lithium Argentina's. So for us, we have a lot of those catalysts to really create significant uplift. So just going through the next slide. So that's a better view of our plant. You can see our guys there working, all stood up, all ready to go on the technical floor there. So for us, we're going to be moving that one forward literally as fast as we can. So just recapping that, plants at 250 tons, we'll be doing the first few kilos of circuit inventory, circuit testing, looking for that battery grade product, at which point the current drilling program, we're evaporating our brine and we're going to truck that down to the plant. Once that has done the first couple of tons of product, that's when we'll relocate the plant up to site. That's creating that junior producer. When people say, is it a real producer? If you were to take the iron ore universe, for example, you've got your majors at Rio Tinto, BHP, Fortescue. This is a Grange Resources style operation. Savage River, 2 million tons, they're still a producer, at which that's the comparable scale to the bigger guys who are up at that 17,000, 20,000 ton per annum. So next slide, please. Quite excited about our drilling program. This is some of the drill. There's the rig on site. We were really fortunate in having an amazing technical team in country. For comparison, we were able to get these permits in near record time, months, not years. You hear all too many stories about ASX-listed companies that are taking years to get permits. Fortunately for us, you're working with a team that's been in Salta. My first trip there was 2007. So before lithium was lithium, this is my third cycle. As mentioned, my last company, Centaur, that got purchased at the bottom of the cycle. Then with no further work, was flipped for 340 million into what is now Lithium Argentina's or Lithium America's, as well as consolidating that salar. So this is built in the same method as that. Patchwork cool to vendors, working it together, focusing on production, and then focusing on ticking off size, scale, grade. Some of you might even be hearing that in your sleep tonight. Size, scale, grade. Anyway, Matt.
How much land have you got?
So we have about 10,000 hectares on the salar. So
Is it all contiguous?
no, it's not. So we have no issues with land or road access. We have very friendly neighbours, and it's more about the key areas. So in Argentina, you have right of access built into the mining code, where you can run your evaporation pond piping along public road and public access infrastructure. It works for you and it works against you. So we actually have a road that runs through one of our salars. It's about 1 metre wide, but you're talking a tenement that's 200 hectares in size. So if you actually think of a drill core, and you can kind of see it, like they're not very big, these pumping wells that are going in. You're talking inches in diameter, not meters. So for us, there is an opportunity for consolidation. We do have an opportunity to acquire more ground on the salar. So for us, there's that opportunity there. But with our existing drill program, we are on a mature salar, which is a free-flowing brine salt lake under the surface, not an immature salar. We're at pockets. At which point, as you can see, quite excited about the cause there, quite excited about the potential for scale of this project. When a company that has done or has just completed the same amount of drilling as you comes out with a 100-year mine life, over 2 million tonnes of resource, you start getting a bit excited in terms of grade, in terms of scale and all the rest. Next slide. So just about who we are listed ASX, market cap about 15 mil, very mismatched in terms of where our valuation should be. Well, that's just my opinion, but I'd like to think it was a bit more consensus. We're hovering about 2 million of cash in the bank at the minute, in the middle of the drill program. Quite excited the results, but for a company that can be producing cash flow, at sort of 5 times market cap, it's quite low, especially when you compare to other operations. Most of the guys who are getting, million-ton resources, some level of production, they're above that 100 mil market cap. Again, going back to the peak cycle, Argosy was hitting $1 billion with 250 tons of resource and a 100-ton plant. So, from that particular interest, we're quite well off in terms of our balance sheet. Very stable, top 20 shareholder, very set register there. Joining myself and Tom is Pete Wall. Some of you may know Pete from Steinpag